Hello, good morning. It's Adil bringing you a review of the European markets. I try to do a afternoon or mid-afternoon update. Obviously, I do a daily one anyway, a weekend analysis anyway. But what I'll try to do from now on is try to give my perspective on things in terms of TA, and obviously from a fundamental perspective, and try and help everybody out there as much as I can. Obviously, by sharing my insights, especially intraday. What matters most is obviously you trading intraday and how you're reacting to all the variables that are flowing at present. Okay, so basically what we have here is that the actual gap higher, we can see this on the German DAX, for example, the gap higher itself is being sold. Now on daily chart itself, I'm going to discuss technicals in a second. But first of all, the whole concept of today's move really is based on the 4-month Greek extension. So markets had short squeezed higher on Friday. A lot of the stops were knocked out, specifically on the FTSE 100 above the 6900 region, obviously on the DAX above the 11,100, also the Eurostoxx, etc. So basically everything had short squeezed higher. Now at present the US futures are remaining strong. The Nasdaq remains strong, still at 4,441 plus. The S&P is still above 2100. So the US markets certainly remain strong, regardless of what happens obviously with reference to Greece. Now we've had German data this week, slightly weaker than expected, although more or less in line. And obviously now we have to face the consequences of the European Union authorizing this bill, and obviously the Greeks putting forward their reforms. And now the games have already begun, obviously with regards to them sending the letter, and obviously with regards to wage increases, etc., etc. You can read through that on Twitter, but basically it's all about the authorization of the Greek program and the 4-month extension, and exactly what the reforms the Greeks will put forward. And then we have the situation with regards to HSBC over the weekend. The scandal hit bank. Obviously there were more skeletons coming out of the closet with regards to Jack Straw, obviously having taken cash, obviously for favours. Scandals obviously reignited, so political uncertainty there, especially with the general election coming up. Adding the fact that we had certain individuals, such as the CEO apparently, who was also implicated with regards to having a account or a slush fund abroad. So, and HSBC obviously earnings coming worse than expected. So overall hurting and denting sentiment quite substantially from the UK's perspective. Europe itself has remained overall strong, given the fact that it has a QE put, and the central banks obviously have the QE, or should we say central bank, have your back, or basically have secured your back. So in other words, just keep buying the dip, okay? Because obviously once you have QE, the market continues to move higher. Okay, so obviously dour sentiment, or very bearish sentiment with regards to HSBC. Obviously that's hurting. Also we've had CBI data out of the UK, which is relatively weak as well. Let's just have a look at the actual markets. Athens is down 0.27%, so nothing to worry there. The MySex is down -5 points, 0.29%, nothing to worry there. The FTSE itself is one of the worst fallers from my perspective, given the fact that it was at 6960 in the futures market. Very bearish. Eurostoxx still at the moment, I mean, it is still positive, but it's come off quite substantially off the highs at 3540, I think it was overnight. The CAC still holding in there, and the German DAX is really the is obviously strong, given the fact that it's still plus 43, but it is down quite substantially. The Swiss market itself is doing well, so overall Europe itself is doing well, given the fact that it's got the QE put in the background, and just bear that in mind. Okay, now look at the technical side of the equation. Now let's see exactly where this market is going from a technical perspective. Okay, so overall the European markets still remain bullish, given the fact that we've broken out of this contracting wedge type pattern, and we're just retesting the breakout, obviously closing the gap potentially. From a German DAX's perspective, a 60-minute chart of the German DAX, I have the market, it's all about, and this is something that I discussed over the weekend as well, folks, it's all about that high volume candle. Let me just draw that in there as well. Okay, so it's all about that high volume candle. So given the fact that the market can remain above or hold that level, that's what counts. Okay, if we break and negate this level, then obviously the story changes, the game changes, and you are looking to potentially close the gap, test these lows, potentially even break lower. Okay, but for now remains bullish, provided we remain above the 11,080, and the German DAX is the leader in Europe. and you know why, because of the volume. And if you don't know, please do watch the video, weekend analysis video, and that explains that. Okay, so we're breaking out of this channel. Obviously we've got this unfilled gap here that still remains afloat. We're holding this key level here around the 11,080 level. We are building a base here. We put in a potential double bottom type scenario, and we are looking to propel higher, and that gap should remain open, from my perspective, provided obviously Greece plays ball and it behaves itself, etc. Then that gap should definitely remain open. Okay, so keep an eye out for that. You do have this expanding expanding wedge. Okay, so from that perspective, it's certainly, from my understanding, that is generally a bullish pattern. It's just consolidation for the next move higher. But that gap itself does remain vulnerable. Okay, but we do need some very bearish news out of Greece to close that. Although one could argue the economic data that came out this morning from Germany certainly does give you that catalyst. Again, that's debatable. From my perspective, Germany certainly remains strong. Why? Because the Nasdaq is making new highs. If you look at the semicons, you're making a new high. If you look at the biotechs, you're making a new high. If you look at the Nasdaq, you're making a new high. So if you look at the daily chart here, and you're making a new high, so therefore German DAX will make a new high. Okay, because the DAX and the Nasdaq are intertwined, given the fact that innovation, technology, etc. Okay, so the CAC now, and we go on to the CAC, which is one of the next major indexes. Okay, daily chart, nothing to really be concerned there, just a pullback, which is normal. Okay, 60-minute chart, we're just retesting the previous resistance equals support, so nothing to worry there. Although you do have this unfilled gap below at 4750, you do need a very powerful catalyst for that to close on the downside. 10-minute chart, all we've done really is just pull back and close a gap. So gap fill support, previous resistance equals support. We broke out this bearish channel, potentially looking for a thrust higher. Okay, and that's basically the summation there. Or like I said, you do have the unfilled gap at 4750 on the CAC. Again, that is a cause for concern, but that would mean a Grexit for that to actually close the gap, especially with the QE put. Very hard for me to see at present, especially given the fact that the Asian markets were more or less higher overnight. So no real concern there at all. Okay, Eurostoxx, as you can see here, we've been making lower lows, lower highs. We're not going to close that gap because the German DAX is not going to close the gap from my perspective, and we are looking for a potential move higher. We're just consolidating. Obviously the markets have got too euphoric, too excited, etc. Obviously it's been corrected, because given the fact that we were at 3530 and now we're at 3500 now, and the bearish news or the correction certainly is underway, and new buyers should step in, and we should potentially, from my perspective, provided, like I said, you don't have any wild card from Greece. Greece is a wild card. Obviously Yellen, any news breaks out with regards to Yellen, that again will be very important given the fact her testimony starts tomorrow. So any bullish, or should we say not bullish, but hawkish comments with regards to the dollar, etc., that would obviously hurt the US rally. So it's all about the US markets continuing its rally, and European markets certainly consolidating here and potentially moving higher. But we are into solid support from my perspective. The key will be, although let me just quickly have a look at the FTSE 100, give you an insight there as well. FTSE 100 daily chart, as you can see here, I did explain this rising contracting wedge pattern, as you all know, you're all familiar with. It is generally considered a bearish pattern. 60-minute chart itself, topping tail on the FTSE 100, although we are making a potential, we are into potential support for now, so that certainly needs to be respected. But there is a pattern, or there is a very strong probability that we could be making a HNS formation, given the fact that that's your left shoulder. Obviously the topping tail is ahead, looking for a potential thrust higher here, and then obviously move lower. So given the fact that HSBC earnings and obviously the uncertainty with regards to the Jack Straw situation could cause a potential risk-off scenario, and obviously poor earnings from HSBC, plus the obviously scandal that they obviously plagued or involved in, and the UK banking sector is certainly taking quite a substantial hit, and 850 certainly is open with regards to that perspective. But again, it's all dictated by situations in Greece, how the reform proposal is obtained. There is rumours now that apparently the Germans are already opposing the wage increases, etc., and the reforms that are going to go through there. Again, that will be debatable, arguments and counter arguments. And also, obviously, with regards to Ms. Yellen, the markets will be dictated by any potential comments from any Fed members or any respected analysts with regards to a hawkish stance by Ms. Yellen. But given the fact that inflation is tepid, given the fact, I mean, I've discussed this. If you go to the actual YouTube channel, if you will see, I have a discussion with regards to Yellen and the Aussie USD and whether or not the US dollar will break out. So it's all about the US dollar at this very moment in time, and as you can see here, we've broken out the channel, and there's a potential causation for Miss Yellen to remain dovish, spin a dovish web, okay, and remain open-minded with regards to interest rates, and that usually will be sufficient enough for the dollar to fall, and then obviously that will propel the FTSE 100 higher. Or alternatively, if she maintains a hawkish stance, then we all know what's going to happen with regards to the FTSE 100 by looking at the 60-minute chart stating H&S formation and daily chart stating rising contracting wedge, which will obviously break lower. Given the fact the oil price is now going as low as $48.9 on the US light crude, that's not considered bullish. That's bearish for the FTSE. That's one of the reasons why the FTSE is obviously sold off from 6960 highs overnight. Okay, and we're currently sitting at 6890. Okay, so 6960, 6890. This is going to be very interesting. Now, looking at the 10-minute chart on the FTSE 100, we are coming into this support zone, so it certainly needs to be respected. Again, it's all about that 60-minute candle, folks. That's all I can tell you. German DAX is a leader in Europe, so that volume, can you see the rise in volume? Okay, this topping tail is all about that. If that can hold this 11,080 level, then we go higher. If that fails, then obviously the German DAX will go lower and close the gap below on the 10-minute chart, which is currently sitting at 11,050. Given the fact that it has weaker data, certainly it does give you that strength, or does add weight to that argument. But from my perspective, I still maintain my bullish bias, given the fact that the Nasdaq is higher, and the market has absorbed the Greece news now, and the euphoria, the bubble from the euphoria has certainly popped. And buyers should step in and should force the market higher. Okay, folks, so my current bias at this very moment in time, I'm bullish. It's been a fantastic day in the live analysis service. Nailed 94 points. Short Euro plus 34 overnight. Short Eurostoxx, short FTSE. As you know, my weekend video did explain that I was bearish on the European markets. I nailed the markets as we close the gaps. And plus 94 points and counting at this very moment in time. And yes, I do have a Eurostoxx long. So as you know, my current analysis is bullish, therefore I should back my analysis and obviously trade accordingly. And those on the live analysis know my trades because I send them via WhatsApp, via email, and I provide constant insights and updates like I do now. Each time I take a trade, I give them a TA argument, I give them a FA argument, and I explain via intermarket analysis so that they can learn themselves in real time and eventually become independent traders, making independent trading decisions, and have a very successful life being a trader. And that's basically what I aim to do, hence the reason why these videos are created, to give you an insight into how a trader trades, or how a trader thinks, and how a trader watches the market and observes the market and reacts accordingly. Okay, so bear in mind, like I said, the S&P 500 is very bullish, weekly chart is bullish, daily chart is bullish. Don't fight the trend. Okay, yes, I was as you know, short European stocks going on Friday night, late Friday night, as I tweeted, if you look at my timeline. And obviously I've closed my shorts now because I have to respect the US markets. The Nasdaq's currently trading at 4440, the S&P is 2106. I'm not going to fight the trend, folks. Okay, the market, yes, the European markets have pushed back, closed the gaps. Time to take your profit, call it a day. 94 points is good enough for a Monday. Over and out, risk on, risk off, wax on, wax off.